So guys, in this video, we're going to talk about refinancing, and I've been getting a lot of questions on this. So what I did is I broke down 5 things that you need to look at and the things that mortgage lenders look at when they're looking to refinance you. But first, if you're enjoying our content, please be sure to click the like and subscribe button so you'll never miss any of our videos. So this past year, the average U.S. homeowner saw their home prices go up by 19%. Simultaneously, interest rates have been historically low, with many lenders offering less than 3% for a 30-year mortgage. With all of that, you've probably thought about refinancing. It's a little more involved than just plugging a few numbers into a spreadsheet. So here's what you should look at when you're looking into refinancing. When it comes to refinancing, credit scores are very important. While historically low interest rates have been driving people to look into refinancing, not everyone will be offered a rate of 3% or lower, even if they have good credit. To lock in the absolute lowest rate available, many lenders are requiring a credit score of 760 or higher. If your credit score is lower, you could still receive a more favorable interest rate than the one you're currently locked into, but it's best to manage your expectations. In addition to higher credit score requirements, lenders are scrutinizing people's debt-to-income ratio a lot more intently. To get the best rates, lenders usually want to see that your housing payments are 28% or less of your gross monthly income. Overall, your debt to income should be 36% or less. Typically, refinancing costs can be about 2 to 5% of the principal amount of your loan. That's for residential. So make sure that this added expense won't cancel out the benefits of your refinancing. So some lenders, you've seen it, they offer a no-cost refinance. But that typically means that you'll pay for slightly higher interest rate just to cover the closing costs. So those costs aren't free. They're just baked into the rate. Be careful that your refinancing costs don't cancel out whatever advantage the lower repayment would offer. To determine if the refinancing makes financial sense, just divide your closing costs by the amount you would save each and every month. If you were to save $100 per month on your payments and the closing costs were $4,000, it would take you 40 months to break even. If you plan to live in your house for longer than that, then it makes sense to refinance. Another thing that lenders will want you to know is the amount of equity you have in your home. So your home equity, of course, is the difference between what your loan is and what the property is worth. So if you choose a cash-out refinance, you can take some of this equity in cash, tax-free. You have to pay it back, therefore it's not profit. One caveat here, these lenders, they're going to require that they get an appraisal in order to refinance. So make sure that they are definitely aware of any improvements or upgrades that you've made to your property. If you've replaced an HVAC, for example, be ready to point that out and provide documentation to the lender. It also helps to make your house as tidy, decluttered, and inviting as possible when the appraiser visits your property. Curb appeal does factor into an appraisal. So if you can mow the lawn or do any minor landscaping improvements, that would definitely be worth your while because you can maximize your loan that way. Once you've done all of that, make sure that you respond to your lender as quickly as possible whenever they request any document. Refis can take 30 to 45 days and sometimes even longer, and it's in the best interest to keep your process moving along because house prices can change. Once the lender has had a chance to review your appraisal and finish their underwriting on your loan, they will send you all the closing documents, including a closing disclosure. Your lender must give you at least 3 days to review your disclosure after you receive it. So be sure to let them know that you received it right away. So those are the steps to refinancing. I know this sounds like a lot, but it's up to each of you to decide if it makes sense financially. But if there's a way to lower your overhead and lower your payment, why not take advantage of it? Until next time, I'm Ken McElroy.